Very good morning, everyone. Charles here again. FRGNT Daily Chart Analysis, Thursday, the 13th November 2025. 0740 Milano, 640 UK, pre-London Open, and third pairing that we have analysed is GBP US dollar today. Very mindful of the fact if we pop up to the economic calendar, I hope you can see this on screen record, that it is a tremendous day in terms of red folder news for that US dollar, even GBP USD, even the pound, sorry, in a matter of minutes. It's going to be a hell of a day. Potentially it could be a no trading day. Let's see how structure aligns, but nevertheless, look at that for a day of attempting to trade. So we'll see how we fare. Nevertheless, back to GBP USD and the chart analysis. As always, bottom right-hand corner, weekly chart. What can we see and what can we say? Well, we can see that the current weekly candle is absolutely rejecting that weekly 50 MA as we imagine and expect to happen. So that is superimposed on the chart, and as you can see in terms of higher probable areas, that is where I'd be looking for a nice short position in line with continued rejection of that weekly 50 EMA rather. As well as that, it's quite some distance away. Let's look in terms of a rough ballpark figure. 200 pips north of current position is another high probable area that I would have been looking for a short position. However, be it a Thursday, it's very unlikely that price is going to move 200 pips before looking to take that short. However, with the amount of US dollar news that is due today, who knows what could happen with this pair GU. So let's see. In the immediacy as well, looking at previous weekly lows, sat in and around that area, superimposed on those lower time frames, is a daily order block where I would also be looking to take a long position, mindful of the fact that we are now then trading towards that weekly 50 MA, of which we expect rejection from. So we'll definitely be needing to seek some confirmation at those lows before looking to take that long position as always. Nevertheless, the here and now, that's enough on the weekly chart. In terms of that daily in the center chart to bring your attention there, what can we see and what can we say? Well, previous daily highs, we've marked that area on, and in and around that area to the bottom left hand chart, you can see that 4-hour time frame. There is a 4-hour order block just in and around that area. We will dissect that a little bit further as we go to the 15-minute time frame. However, what we can see and say is that price has now dropped below that 4-hour 50 EMA. So we are expecting continued rejection from that from that 4-hour 50 EMA. With that said, in and around that 4-hour 50 EMA, now here lies the difference between winning and losing. So you will see we have a couple of areas marked for short positions, and here we really just have to take the facts into consideration. So around that weekly 4-hour 50 EMA, we have a 15-minute order block where if you were to assume basic structure, basic price action, lower low, lower high, lower low, we're searching for that lower high before potential continuation lower low to be created. So a short position from this 15-minute order block does make sense. We can't discredit it just because it is not aligning in and around a higher probable area, of which we have a 4-hour order block refined. We have a 1-hour order block in and around this area as well. So in order to take this position, I will need required confirmation, breaks of structure, candlestick formations, all of the usual confluences required before taking a position. And then in terms of range, of course, this will then be an Asia range fill as opposing to a higher probable play. So let's mark those areas on there now just to illustrate exactly what I'm talking about. So Asia range to be filled. So what I need to happen is the lows of Asia, let's draw it on for you, are required to be available in order for me to take this position. So price is going to have to pop up after London. Give me this illustration of lower time breaks of structure, potential bearish 15-minute candle closure with a wick imbalance to the highs. I will then mark that wick imbalance, look for a lower time frame order block, lower time frame break of structure, then going short. I would then be forced to manage my position at Tokyo lows. So let's see in terms of range and how that position could look like. GU, so a maximum of 10 pips. That will certainly allow me to cover that order block and previous daily highs. So it's shaping up nicely. However, risk to reward, how is that looking by those lows? Perfect. So I can absolutely get a decent return on the investment if that play is to occur. But as I said, the low must be available for me to take this position. So if London opens, let's say for example, and a candle already fills Asia, I will not take this play. It's as simple as that. However, if London opens, as I said, prints upwards, fills Asia to those highs, pops up into that imbalance, leaving me with my confidence that's previously described, then indeed I will take that short position every time. And why? Well, let's have a look to see how price is respecting EMAs. 4-hour EMA, price is going to come up into that 4-hour EMA, and then we're going to expect a rejection from that. So how that's going to look on the 4-hour candle, let's say for example, current 4-hour candle, this 4-hour candle is going to pop up into that EMA, tag us into the position, flip bearish, leaving us with a wick to the high, just like this candle here. So I know we're looking at quite some distance into the future, but you have to make these plans in advance. You have to foresee what your plan is going to look like in order to trade it. So this is the 4-hour candle, probably not to that extent. However, that is a 4-hour candle that I'm going to assume will be printed as a result of the pullback into that 4-hour EMA, pullback into this 15-minute order block, then expect the rejection from that 4-hour 50 EMA, and then we'll get that bearish closure on that 4-hour candle. To align with additional confluence that I would not usually take too much into consideration, let's look at that 1-hour price as well. It's important to recognize, use the facts to the left on this 1-hour candle. Every time price came into that 1-hour 50 EMA price, it's self-explanatory. It respected it, it moved off. Price came in, respected it, move off. Then price started to dip below, meaning that a potential change of trend. Price then dipped below, moved off, respected that 1-hour 50 EMA, moved off, came back in, respected that 1-hour 50 EMA. So we can only seek to use those facts, build the story, build the confluence, and trade a line with it. So again, the same practical play should happen. Once price dips into that 1-hour 50 EMA, in and around this area here on that 15-minute order block, we can expect a rejection again from that 1-hour 50 EMA, leaving us with much of the same that we see to the left. Wicks in, rejection. Again, plan your trade, trade the plan, trade with confidence, using the confluence. You may laugh, but it adds up over time. Please believe me. So that's the initial play on the short position. Up here, up into this 4-hour order block that has yet to be mitigated. Of course, that would be my higher probable play, regardless of Asia being filled. Come London open, if price still was to dip up into that area, I am absolutely taking the short position after confirmation. With that said, then range we have from those highs to the absolute lows, where I'll be looking to take a long position, 120 pips at the least. So provided we can get ourselves a decent entry in and around this area, then again, it'll be a lovely play in terms of a short position on GU today. As we see up to the highs, it's not going to happen unless news is going to push price 200 pips, which is not unheard of. But let's look at what we have at the moment. And then in terms of the long position that you can see I've already drawn out from the lows, it's been there since Monday. To be quite honest, I won't take credit for drawing that today. However, all of the same that's been spoken about in this area, I'll need to see the same. We are in the pardon the noise. Central Milano can be very noisy at this time of the morning. We are going to be trading from those previous weekly lows when price gets in and around this area. And of course, that's a high confluence area paired with the fact we'll be trading within that daily time frame order block. It's a Thursday. Can we see price coming down and then having enough steam to push us up to at least go break even? Absolutely, considering there is news bound, or we are news bound at this time. Let's see how price fares on GU today and tomorrow. Hope you can gain some insight into my method of trading smart money concepts based alongside my interpretation of that. Appreciate your support, appreciate your time. All the very best. GU, take care.